Hello guys, welcome to the next unit. In this unit, we'll put all the concepts together and see a complete example for the trading plan. Okay, so let's just begin. As you can see, here's the whole trading plan I use. The first point of the plan is that I check if there's any upcoming news for that day, any upcoming high impact news to be more precise. It means that before you do your markups or do anything related to trading, you have to open forexfactory.com and check the upcoming high impact news. So I will just open forexfactory.com, as you can see, and on the front page, you'll be able to see the upcoming news, which are these. Let's say it's the 4th of January and you are trading on this day. The first thing you have to do is checking the upcoming high impact news. On this day, there will be 3 high impact news marked with red folders. As you can see, these are the red folder news, are the high impact ones. We have a golden rule for high impacts. The rule is that we don't trade during these red folder news. Just don't open any position in that time window. Monitor the market, but just don't open a position. That's the golden rule here. If there aren't any upcoming high impact news, you can safely trade as usual. So you did the first point, you check the high impact news. Let's see the second point. The second point is the 4-hour supply and demand markup and determining the overall market direction. Knowing the higher time frame direction is necessary if you want to be successful in trading, especially in this 1 minute lower time frame strategy. Okay, so let's see an example, a whole example for this second point. Okay, so let's see the live example for the supply and demand markup and determining the overall time frame direction on the 4-hour chart. So as you can see, we are currently on the 4-hour chart, and if you take a closer look, you will see that price is moving in an extremely bearish trend, creating series of lower lows, lower highs. And if I just focus on this region, you will see that price is respecting supply zones over and over again, breaking structures to the downside. As you can see, we have this supply zone right here, broke structure to the downside here, supply zone respection here, another break of structure to the downside, another supply zone respection. So we are moving in an extremely bearish trend. We can identify this by looking at the chart simply. Okay, but let's focus on this region. Because as you can see in this region, price is moving in aggressively bearish. So it's creating breakout structures to the downside again, sweeping liquidities, breakout structures here, respecting supply zones or mid-zone areas, breakout structure to the downside, respecting supply zone, breakout structure to the downside, small pullback, breakout structure to the downside, small pullback, respecting supply zones. And actually, let's focus on this region now. So as you can see, we had this supply zone right here that price just respected after the breakout structure. So here was the breakout structure, and the breakout structure happened from this supply zone. Let's see if it swept any liquidity. I will just put my marker right here, and let's see if it swept liquidity. As you can see, it actually swept small liquidity from this region. When price was moving in an uptrend, it actually swept this trendline liquidity, and we had this double bottoms on the 4-hour chart, as you can see. So it swept liquidity, created inefficient push to the downside, because here's the inefficient push to the downside, here's the breakout structure, here's the liquidity sweep, and the liquidity sweep from that demand area. Okay, so price just did a breakout structure, and actually it could have reversed on some sort of demand zone right here. Okay, we have to find that demand zone. I will just put my marker right here, and let's see if there's any demand zone in the back region. Actually, there is, as you can see, here's this perfect wick that perfectly reversed the price to the upside. Because as you can see, this wick created an efficient push to the upside here, also broke some structure. So this isn't the most valuable demand zone because it doesn't have all the 3 criteria, but it is still a demand zone because it could have reversed the price. Okay, so I just extend this zone. So I just extend this zone and remove this line from here. Okay, so as you can see, price tapped into this zone here and reversed to the upside to tap the supply zone and continue the overall bearish order flow. So in this region, after this demand tap, you had a room, you could have room to trade long trades between this demand zone and between this supply zone, but those are counter trend trades. Our main trend here is bearish. It's creating a series of lower lows, lower highs. So the overall main trend is bearish. These downside movements are the main trend movements, and the small pullbacks are the counter trend movements. So you actually had room between this demand zone and this supply zone to trade long trades up to this supply zone, right? But the main direction is bearish, so we want to see short opportunities. Okay, so let's say you open the trade here because there was a 15-minute change of character inside of this 4-hour supply zone, and after the 15-minute change of character, there was a 1-minute change of character inside of that 15-minute supply zone. So you entered here, it pushed the price to the downside, created inversion movement here, broke structure here. So it means price created another supply zone. As you can see, it created huge inefficient push to downside, break of structure, actually swept liquidity from this region, created liquidity here. Here's a liquidity trend line. Also liquidity, liquidity, liquidity. So there are loads of liquidity sitting in this region, waiting for the supply to be tapped. As you can see, this could be our correct supply zone because this supply zone caused the inefficient push to the downside. So I will just mark it out as our 4-hour supply zone. Okay, so actually price broke through this demand zone, as you can see. So demand broke. That means an opposite side zone has been created, which is this supply zone up here that has all the 3 criteria. Let's see if price stepped into another demand zone right here. I will just put my marker again here and see if there's any demand zone that price has stepped. As you can see, we have this weak zone again. This one, I will just change the color to blue. So we have this weak zone right here. That this isn't the most valuable demand zone again, so it more likely will be broken and price will break through this demand zone after the reaction. Sorry, so price will break through this demand zone after the reaction. As you can see, just did a small change of character or break of structure to the upside with not much of an inefficient push, small liquidity sweep. So yeah, this range, this region is just a range, and range and demands in ranges aren't the most valuable demand zones. Okay, so I just extend this zone here again. As you can see, price was perfectly reversed on this zone. So once again, price created this supply zone, inefficient push, break of structure, liquidity creation everywhere. So this is just a whole big liquidity pool needs to be filled. After the demand break, this demand break and the inefficient push, price stepped into another demand zone, and the demand zone reversed the price again to the upside. So you had room between this demand zone and this supply zone to trade long opportunities again, but those are counter trend movements. Just notice this, every long trade in this trend is counter trend movement. The main trend movements will be short trades. Main trend movements are more impulsive, has more volume, and safer to use. So as you can see, price stepped into this supply zone, the 4-hour supply zone that we just marked. Right now, we are waiting for a reversal inside of this 4-hour supply zone on a 15-minute chart or a 1-minute chart. And as you can see, there's one more important thing to be noticed. We have triple taps on the 4-hour chart. So as you can see, we have the first tap here. This is the first tap. We have the second tap here, and the third tap has been just formed. So we have a liquidity line on the 4-hour chart, which means price has a really high probability to sweep all of this liquidity before the reversal to the downside. Okay, so here's the liquidity. So the possible scenario here is that price maybe reverses on the supply zone, and after the reversal, it will sweep all of the liquidity from above this line, collect all of the stop losses, collect all of the orders. Just imagine how many millions and trillions and billions of dollars are sitting just above this line. This is a 4-hour chart. Literally trillions of dollars sitting just above this line. Price will sweep all of this liquidity in order to continue the whole bearish trend. So it has to collect the orders, has to collect the stop losses in order to open more positions, open more sell positions. And after the sell position collects and everything, price could reverse to the downside. Okay, so we actually marked out all of the 4-hour zones. Maybe we can mark out demand zones in this region. So as you can see, price was moving in a downtrend here. After this price change character, this was the last supply zone right here. And this demand zone right here changed character on the 4-hour chart. As you can see, it caused huge inefficient push to the upside, change of character here, here, here. So basically change character everywhere. So this will be a valid demand zone. After this supply has been tapped and the 15-minute change of character happened, we can target this demand zone right here, or maybe another decisional demand zone, because as you can see, we have a decisional demand zone right here, but price has a really great chance to sweep this demand zone, because if you take a closer look, this is just liquidity again. That's what I was talking about in the liquidity unit, because as you can see, we have triple bottoms here again, first bottom, second bottom, third bottom. So this is just a huge liquidity line lined up with the demand zone. So price has a great chance to sweep the liquidity from above this supply zone. After the reversal, sweep the liquidity from below this demand zone. So sweep all of the liquidity. And what could hold the price after the downside liquidity sweep? This demand zone could easily hold the price, right? So this could be your first target after the enter on this region. So once again, liquidity sweep, after the liquidity sweep, reversal on the 15-minute chart and on the 1-minute chart. And after the reversal, you can enter in a trade, in a short trade, and target this demand zone. Okay, so I believe we marked all of the zones out inside of this region. These zones are irrelevant because they have been already mitigated by the following price action, as you can see. So this supply zone is mitigated by this is mitigated by this is mitigated by this. So the only unmitigated areas left are these zones. Okay, let's see the third point. Okay, so let's see the third point. I will just paste the print list here. As you can see, the third point is finding the 15-minute supply and demand zones and marking them up. Okay, this is a really simple task. Let's see the structure first. As you can see, this was the 4-hour supply zone that we just marked on the 4-hour. This caused the breakout structure on the downside in the 4-hour chart. Here's the 4-hour liquidity line, the first tab, second tab, third tab. This was the first extreme demand zone that changed character on the 4-hour chart here. This is the 4-hour decisional demand zone with liquidity just below the zone. So yeah, let's see the price action. As you can see in this region, everything is mitigated. So all of the supply zones inside of this region are mitigated by the following price action, as you can see. So all of the zones in this region are efficient and mitigated. So we will have to focus on this zone. Okay, price is actually in the 4-hour supply zone right now, as you can see. And if I zoom in, you will see that price created the fourth tab here. So we have 4 tabs, 4 equal tabs. So imagine how much liquidity are sitting just above this line. Price have to sweep that liquidity. Okay, but mark out the zones. Focus on the most relevant zones. As you can see, price was creating a series of higher lows, higher highs and higher lows in this region, starting from this extreme demand zone. And actually price changed character here on the 50-minute. This is a 50-minute change of character. I will just mark it here as a change of character down. So price change character on the 15-minute chart with inefficient push, as you can see. Actually, the first change of character happened here because this was the last upside candle and the last reverse before the last high has been reached. And this supply zone changed that character. I will just mark that supply zone here. And we'll just zoom in. So this supply zone changed the character first. This decisional zone broke structure here and changed the bigger character. So we have 2 supply zones right here, as you can see. I will just mark the decision out too. So yeah, after this, price started to do a bearish trend here on the 15-minute chart. But price stepped into this demand zone right here, tapped into this demand zone, and changed character to the upside after the tap of this demand zone. As you can see, this demand zone is really valuable because it's flat liquidity here, created inefficient push to the upside, and had the liquidity just above it, and multiple liquidity lines everywhere. So this is a really valuable demand zone. Price tapped this zone, and after the tap, it reversed to the upside. Okay, so in this region, price is moving in an uptrend, so it's bullish. But knowing the fact that the overall time frame direction, so the overall 4-hour direction is bearish, we know that taking long trades in this region are counter trend movements, right? So everything that has been taken on the long side is a counter trend movement. But you can still take it but you just have to know the fact that you are trading a counter trend movement, and it has less chance to hit TP than the main trend movements. Okay, so we marked out this demand zone. As you can see, it reversed the price here, change character to the upside again here. So here's a change of character up. And actually, this demand zone right here caused the inefficient push as in change of character to the upside. And as you can see, price reacted on this demand zone here, just a week below. So this isn't a real break because, as I told you, the wicks below are just liquidity sweeps. So it could have been a liquidity sweep from this region, could have been a liquidity sweep from this region. So these are just liquidity sweeps. Okay, price actually reversed on this demand zone, as you can see. I believe there was a 1 minute change of character inside of this zone. And after the 1 minute change of character and the entry opportunity, price started to form series of higher highs and higher lows. Okay, let's focus on the supply zones. As you can see, this supply week is a flip zone. Also, this supply week is a flip zone too, but this is less valuable because it didn't have that much reaction than the extreme one. So, okay, I will just delete this one and focus on the extreme one. So, as I told you, this supply zone changed character to the downside first here. And as you can see, after the demand change of character, price started to form series of higher highs and higher lows and tapped into this supply zone. Okay, let's focus on that region. As you can see, price tapped into this zone, did a reaction, rejected on that zone, and after the rejection, it just blew to the upside and created this demand zone. So this will be our 15-minute flip zone. One more noticeable thing, that 15-minute flip zones are really, really strong. You have to focus on the 15-minute flip zones every time. Just mark them out and remember the zones that are flip zones. Okay, so this is the 15-minute flip zone. This is the 15-minute demand flip zone that caused the top of the 4-hour supply zone. As you can see, this was the top of the 4-hour supply zone, and it happened with a huge inefficient push to the upside. And it actually swept liquidity from this region, and also it swept liquidity from this region also. So yeah, we have this demand zone right here. And below this demand zone, we can find several demand zones. For example, this one, but this isn't as valuable as this one because this is the flip zone. This is the major demand zone. These demand zones just broke structure to the upside with inefficient push. Of course, they are valuable. They also swept some liquidity from this region. They are valuable, but not as valuable as this one. Okay, let's mark out all of the demand zones. As you can see, we have this one here also. And maybe this one too. So we have 4 demand zones, 4 15-minute demand zones. Okay, but we will focus on this one. This could be our later target point for the shorts. As you can see, price didn't really change character here. I could call it a pullback instead of a change of character. But as you can see, price created a new high, body break here. And after the body break and the wick above, it created a false change of character to the downside. And after the false change of character, it's coming back up to collect more orders on this zone, because just imagine how many sellers are opening positions on this week, because they thought that this is a change of character on this 15-minute chart, but they didn't notice the 4-hour liquidity line from above this supply zone, right? So market is just collecting more liquidity to be swept. So we are collecting more liquidity, and we are expecting the sweep of this liquidity because more sellers entered on this line, more sellers entered the market on this supply zone. So yeah, the next thing we have to do is wait for the liquidity sweep. But we will do that on the 1-minute chart. So we marked out all of our 15-minute zones. Maybe we can mark this zone out also, but this will be inducement for the downer areas, for these areas. Okay, let's see the next step. Okay, so let's see the next point. As you can see, the 4th point is refine all the 15-minute supply and demand zones on the 5-minute chart. So this will be easy. We already talked about refinements. So let's just begin. As you can see, currently we are on the 5-minute chart, and these were the unmitigated demand zones that we just marked previously. So we will have to refine these zones. Okay, let's begin on the first one. The first one is the flip zone, as you may know, because this 15-minute demand zone flipped the 15-minute extreme supply zone. So this was the 15-minute extreme supply zone that changed character on several places here. So this will be our most valuable 15-minute demand zone, and this will be our later target point. Okay, so let's just refine it. if I zoom in, you will see that we have a clear refinement inside of this 15-minute zone, this bigger zone. We have a smaller 5-minute candle, this one, and the inefficient push and the breakout structure and liquidity sweep started from this candle. So this will be our perfect refinement. As you can see, we can refine this candle for this downside candle, and I will just type the 15-minute flip zone 5-minute refine. Okay, let's see the next zone. The zone below this one is this zone. As you can see, inside of this 15-minute zone, we also have a clear 5-minute demand zone, this downside candle, because the inefficient push and the breakout structure and the liquidity sweep started from this candle. So as you can see, huge inefficient push to the upside. Here's the breakout structure. Again, here's the liquidity sweep because there's double taps. So we have a clear refinement again. We can just use this candle as our 5-minute refinement. I will just type 5-minute refine again here. And that's it. Let's see the next zone. So this will be our next zone. And as you can see, inside of this 15-minute POI, 15-minute demand zone, we have inefficiency again because inefficient push started from this candle, from this upside candle. As you can see, here's inefficiency because the wicks between the candles doesn't meet in the middle. So we can use this candle as our 5-minute refinement. It also broke structure. This was the candle that started the whole order flow that broke structure here. And yeah, it actually swept some liquidity from this region, but it is not as valuable as the 15-minute flip zone here. So this one, but we can still refine it. Okay, let's see the next one. As you can see, I will just zoom out first. So these are the refines that we just did recently. I will just type 5-minute refine again here. And as you can see, this is the last 15-minute zone that we have to refine. And inside of this zone, we will have a clear zone again. So the inefficient push started from maybe this small candle. As you can see, the wicks doesn't meet in the middle. So the inefficient push started from this candle, and the breakout structure and the liquidity sweep also started from this candle because here's the double tap, here's the breakout structure. But if you don't want to use this small candle, you can just simply use the bigger candle like this, because the taps are almost equal and the inefficient push started from these taps. So if you don't want to use this small zone, so this small zone, you can just simply use the bigger one. Okay, so the next one, this big zone, is the 4-hour zone. And actually, if you want to refine this 4-hour zone, you can refine it on the 15-minute chart. I usually just leave my 4-hour zones the way they are. So I don't really refine them. But if I take a closer look, you will see that inside of this 4-hour zone, we will have, for example, this 15-minute zone for a refinement because the inefficient push started from this candle, and also it changed character here. So yeah, I will just keep it like this. I won't refine it, but if you would like to refine the 4-hour zones on the 15-minute charts, you can of course do that. So yeah, let's switch back to the 5-minute chart. So these are our refinements. These are all the 5-minute refinements. And the next step, actually you can mark more 5-minute zones out on the 5-minute chart that weren't appear on the 15-minute chart. So if I like to, I can mark 5-minute zones out. For example, here's a clear zone. As you can see, this zone is clear because it started an efficient push here and swept these double taps and broke structure here. So actually I can just mark this 5-minute zone out if I'd like to. And it also has liquidity just above it. So here are liquidity. As you can see, this upside candle created a small pullback here and created the first bottom. And this pullback created the second bottom. So this zone has liquidity. But if price reverses, I believe, after the liquidity sweep, so price reverses, it will hit the 15-minute flip zone, because this flip zone has so much power. It flipped the 15-minute supply zone. So I believe if we enter in shorts, we will target this 15-minute, this 15-minute flip zone. So yeah, actually you can mark out more 5-minute zones if you'd like to, but in this case, I find it unnecessary. So let's just skip this part and jump to the next point. Okay, so let's see the next step. As you can see, it switched to the 1 minute chart and mark up any potential 1 minute zones that could lead to the 5 minute zones. Okay, so basically we are waiting for, sorry, I just replay the price. Okay, so basically we are waiting for the liquidity sweep from above this region. So as you may know, there are 4 equal taps on the 4-hour chart, on the 15-minute chart, on any chart. So there's huge liquidity on this line. So basically we are waiting for the sweep of this liquidity on the 1 minute chart. And after the 1 minute chart sweep, we will wait for a 1 minute change of character to the downside. And after the change of character to the downside, which will happen somewhere around here, after the change of character to the downside, we will have a supply zone that change character. And after a supply zone that change character, we will look for a short opportunity on that supply zone, and we will target the next unmitigated demand zone, which will be this one in this case, because this is a really strong 15-minute flip zone that I just talked about. So once again, 1 minute change of character and liquidity sweep happens after a supply zone will be formed, enter on that supply zone and target the next unmitigated zone. Okay, but actually, why are we waiting for short opportunities? Let me just talk through this again, switch to the 4-hour chart. And as you can see on the 4-hour chart, the trend is extremely bearish, right? So as you can see, the movements on the 4-hour chart are bearish movements. The main movements are bearish movements. All of the downside movements are huge, inefficient, high volume movements, breaking structures and sweeping liquidities, inefficient movements. And all of the upside movements are just small pullbacks with no inefficiency, no volume. So as you can see, all of the downside movements are huge, inefficient movements. All of the upside movements are small pullbacks, downside movement, huge, inefficient movements. And this is our pattern right here. We are looking for short opportunities. And on the 15-minute chart and the 4-hour chart, we have a huge liquidity line just above the 4-hour supply zone. And this will be the perfect opportunity for the short entries. Price will sweep this liquidity, and after the sweep, it will create a change of character and happen a trade. This is our perfect pattern here. Okay, so let's just switch to the 1 minute chart and actually play price forward. We are waiting for the 1 minute sweep, waiting for the sweep on the 1 minute chart. On the 15-minute chart, it will look like just one big candle that sweeps the liquidity with the wick, and after it will reverse, but we can catch a good anti-opportunity on the 1 minute chart. So this is the liquidity line right here. Let's wait for the sweep. Okay, small pullback. And actually the sweep happened, as you can see. And this was the last demand zone that created the sweep and the breakout structure to the upside. Let's play price forward. Price swept this liquidity line, as you can see. That's what happens next. And as you can see, price broke through the last demand zone that created the liquidity sweep and the breakout structure to the upside on a 1 minute. And price swept all of the liquidity from above this line, swept the trillions and trillions and trillions of dollars from above this line, from above the supply zone. And after the liquidity sweep, it reversed immediately, as you can see, with huge inefficient move to the downside and broke through the last demand zone. And actually it broke through several demand zones because we have this demand zone right here. So yeah, this means a demand zone has been broken. This means we have a supply zone. Sorry, the recording stopped suddenly. I don't know why, so let's just continue. So as you can see, this demand has been broken. So it means a supply zone will be automatically formed, because if a zone breaks, an opposite sign zone will be formed. Okay, so here's a change of character. As you can see, price change character here because it broke through the last structural low point. And this was a strong low point, as you can see, because it created the last high point and swept liquidity from this region. So price just broke through this demand zone. Okay. Let's find the supply zone that caused the break of this demand zone. As you can see, here's an inefficient push that came into the market. Here's the liquidity sweep from this region. Here's the change of character. So which supply zone caused this change of character, inefficient push, and liquidity sweep? This upside candle has been already mitigated by the following candle, right? But the following candle is already inefficient. So this is all inefficient. So in this case, as I told you, we have to use the wick as our right zone, because this candle is mitigated by the following candle. So the wick is the only unmitigated area. Okay, so I will just mark it out as our supply zone. And I will set my order limit on this zone, a sell limit. And I will set a 2 pip point stop loss. So as you can see, the 2 pip exactly covers the zone. So we can use the 2 pip stop loss. And if we would have used the full body, which is not correct in this case, the 2 pip would not be enough, as you can see. It's already almost 5 pips. So the only right zone here is the weak zone. Okay, I did set an order limit on this zone, and I will target the next unmitigated 15-minute zone, which is our flip zone. Okay, this is a really, really strong flip zone. We just extend the position a little bit, and let's play price forward. Okay, so as you can see, the pullback happened. Price created liquidity for this zone. So that's perfect. As you can see, here's the first tap, here's the second tap. So we have liquidity just below this zone. So we have perfect liquidity, perfect zone, perfect inefficient push, change of character, break of the demand zone, liquidation of the 4-hour liquidity from above this line. So this is a really, really perfect textbook setup, right? Price flat, higher time frame liquidity, created inefficient push to the downside that changed character, broke through the last demand zone, created liquidity just below the freshly formed supply zone. So yeah, I did set an order limit. Let's see what happens next. Price is coming up to mitigate the zone, almost mitigated the zone, and reversed immediately. Okay, let's play price forward. And price has been left without us. So as you can see, price didn't actually tap our entry point and left without us, but that's perfectly fine. Let me tell you why. I wanted to show you that you'll miss loads of trades and opportunities. You have to get used to this. I also wanted to show you that Forex trading isn't always fun and easy. You'll miss huge opportunities like this, and you'll get stopped out a lot of times, but it's all good. All you have to do is follow the trading plan. If you follow your trading plan, no matter what, you'll find consistency on the long run. That's the #1 most important rule. Follow the plan no matter what. Get used to losses, get used to misses, and leave your emotions out of this game. In this example, we followed the plan. Price gave us an incredible opportunity, but didn't mitigate the POI. It is what it is. At least you'll know that your analysis was on point, right? You have to adapt and focus on your next trade. So that's perfectly fine if you miss a trade like this. Don't stress out. Don't think about it too much. Just adapt, close your position, and monitor price. You can mark out new zones. You can find new opportunities, and that's perfectly fine. Okay, let's do another example, but now with a tag.